What do you protect your income from? Income protection. It doesn't matter whether you are a business owner looking at this video or if you are an individual without a business, simply having a job, you need to understand that you need to protect your income. But what do you protect your income from? You might have seen it in the Instagram video that I did earlier today. But I'll remind you, a stroke occurs every 40 seconds in the United States. 6 in 10 Americans live with at least one chronic disease. An estimated of 1.9 million new cases were diagnosed back in 2023. Yes, this is an outdated slide, but I'll make sure to bring it up to date next time with the newest stats. And the last one, 6.5 or more people are living with Alzheimer's dementia disease. This is, my friends, what you need to work on and protect your income from. The differences here is when you are a business owner, there's different strategies that you can implement to make sure that your business can fund for these protections and get additional tax deductions. But let's dive a little bit deeper. How, which is what I promised you guys in the social media video. How do you protect your income? Okay, well, let's look into these opportunities. Life insurance. I'm pretty sure at this point, life insurance, you heard about it left and right. Some people are probably talking smack on the product. Some people are probably praising the product. To me, it's about you understanding the product, okay? A life insurance policy is what that is. It's life insurance, not death insurance policy. And some people don't understand this. A life insurance policy, when you structure it properly, it can give you revenue. It can give you money to protect all of these expenses, whether it's going to be household expenses, adult daycare, home modifications, anything that you can think about with some limitations. I'm going to put a big disclaimer in here. We need to make sure what type of policy you are going to be looking into, but this is how you can do it. Life insurance. Let me give you a case scenario. You might be looking on the screen right here. If this is a 45-year-old male, if you are looking at this video and you might be a 45-year-old male and you are a non-smoker, we're going to use in this case a term policy, okay? For $1 million death benefit. The death benefit is the portion that our family will get once we are gone. But now let's focus on the living benefits, or how do we protect our income. In this case scenario, the projected accelerated benefit rider, the values for the policy at the age of 55. Okay, these are just projections. This is never guaranteed. But once again, this video is for you to understand how do you protect your income. If you were to be diagnosed with a terminal illness, this policy can pay up to $852,000 on a lump sum. If you get a chronic illness, this policy can give you $11,000 per month to substitute the wages that you are losing from not being able to go to work. If you have a critical illness, the policy can give you a lump sum of $780,000, and you probably are seeing this slide somewhere behind me. And if you have a critical injury, will also give you access to about $780,000. Well, how much does this cost? Well, let's dive a little bit deeper. When you talk about a term life insurance policy, you will have multiple options. Okay, you can have a protection for 10 years, for 15 years, for 20 years, or for 30 years. In this particular case, if it's a policy for 10 years, the total annual premium is probably going to be around $1,300. And if you go all the way on the right side of the scale for a 30-year policy, $3,985. Well, now let's look at the bottom numbers, the totals. For 10 years, you're probably going to be putting into this plan $13,000. But if you're going to have this plan in force for 30 years, you're going to be putting $119,000. Okay, sounds like a lot of money. But you got to remember that a lot of the policies that are term, I've always advised you, whether you're a business owner or an individual, we want to make sure that we try to convert a portion down the line into a permanent life insurance policy. Let me tell you a little bit more about a permanent life insurance policy. You might have seen this in a video before, but if you're here sitting in this whole entire class, I want to make sure that you understand who the GAO is, the United States General Accounting Office, or the bosses of the IRS. They made it so much easier for us individuals to understand the tax treatment of life insurance policy in their tax code. I'm going to read this for you, and I want you to read along with me, okay? If a policyholder borrows the inside bill from his or her life insurance policy, the amount borrowed is considered a transfer of capital, not a realization of income, and therefore is not subject to taxation. This reasoning is in accord with tax policies on other types of loans, such as consumer loans or home mortgages. Let me take a breath right here. These loans are merely a transfer of capital or savings. Sorry, we're doing this video live, so I'm getting a little sidetracked. Abarca, come over here and say hello to everybody. Which, by the way, I'm going to take advantage. If you are a business owner and you are trying to understand how to create social media content, you got to come and work with this gentleman right here, Jorge Abarca, a good friend of mine, which he has helped me understand how to develop myself into social media. You need to leverage social media. You need to learn to put a course together like the one you're looking at right here to be able to put your message out there when you have information. This is the gentleman that distracted me right now. Thank you, George. I appreciate you, brother. So coming back down to the presentation, reading this form, this paragraph right here. The loans are merely a transfer of of capital or savings from one person to another through a financial intermediary. The ability to borrow against a life insurance policy means that the interest income that is supposed to be building up to fund death benefits can instead be a source of untaxed current income. If the loans are not repaid, the inside build-up will never be taxed. Death benefits will simply be reduced by the amount of the loan. Those policy holders, that means you, have the use of tax-free income, not tax-exempt, tax-free income for purpose other than insurance at the expense reduced of death benefits to their beneficiaries. This means our family members, whoever is going to be getting this death benefit. Okay, that sounds like a lot of information and I agree with you, but let me break it down to you. Okay, now we're going to look at the same case scenario of income protection. Let's not walk away from the topic. We want to talk about income protection with an added benefit on top of sources of revenue for ourselves once we get older. But let's dive into it. 45-year-old male, non-smoker, $1 million death benefit. This will be the main focus at this time around this presentation. Now, let's start from the top. The money, cha-ching. How much is it going to cost you to have a policy like this? If you are, how old we said? 45, okay? Comment 45 in this video if you are taking a look at it. 45-year-old male, the annual premium is $16,810. This is not your regular life insurance policy. This is a policy for somebody who understands the value of using the tax code. Remember, now we don't want to just protect our income, but we want to put money aside for ourselves to have access to it tax-free. Well, let me bring you up to the right side of the slide. You probably are seeing it behind me, or the left side. I'm not sure what size it's going to be. Policy design is crucial, okay? For how long are you going to be paying the premiums? We got to pay attention to that. What is the cash value versus the death benefit? When we're building a policy that we want to have access to money for income protection, but we also want to make sure that some of this money is being put aside for us to have access to that cash accumulation, we want to design this policy with the lower amount of death benefit for the high cash accumulation. Okay, now cash values are always going to be subject to index funds. In this particular case of an index universal life, sounds like I'm going back and forth. But remember, this is for you to start to get the basics of income protection with the added benefit of creating cash value if you don't have a retirement account, even for your business or for yourself. So we're coming down here. If I die tomorrow, $1 million death benefit. That is the money that our family is going to get once we are gone. But now look at this part right here. Live too long. If need cash, I can take a loan or withdraw from my policy's cash value. The cash value is the money that is growing in here. Remember, once again, it's going to be based on the index funds that we're going to be using this policy for, and it's going to allow us to use this money tax-free. Estimated after 69, at the age of 69, you might have about 716,000. At the age of 74, you might have about $1 million. 79, you will probably have 1.4 mil. And 84, you probably are going to have $2 million. But look at the bottom part. We are still protecting our income, which was the whole point about this video. How do we protect our income? Remember, with a little bit extra on top to build cash value using a life insurance policy. Same benefits are there like they are on the term policy, but now on top of that, we're going to be able to take care of, build additional cash value. I will invite you, if you want to learn more about cash value index universal life insurance policy, whole life insurance policy, to set up a call with us or one of our partner members here at Leto Financial to really dive into this matter. I'm not going to dive deep into all of the strategies for the index universal life, but I want you to think about this. How much do you need to make to protect your income? If you are a solo breadwinner at the house, your whole entire family depends on your income. It doesn't matter if you're making 50,000, if you're making 100,000, you need to protect your income. If you are the CEO of a multi-million-dollar company and you're making $1 million, you should still leverage these tools to protect your income, because one thing is what the revenue the company is making, the other thing is what your family is bringing in. This is just another tool that is out there available for all of us. Life insurance with income protection and even cash value that you can look into. Now, what is gonna hold you back from really understanding this product or this vehicle or this opportunity is you. If you are not asking the right questions. Matthew 21:22, and whatever you ask in prayer, you will receive if you have faith. Why am I bringing in this verse into this conversation? One, I understand that my values as a family member, as the head household, I am very rooted into the Bible. And the Bible tells us along the way, if you ever take the time to read it, ask questions. And this is what holds you back, what has held me back in the past from being able to grow and build wealth for my family, not asking questions. I hope you're taking something, I hope you learned something from today's class. And if you are looking at this class from our social media, I want to remind you to follow, like, and share. Become a subscriber in our page so that you can get notified of our next classes that we're going to be hosting live here in the beautiful city of River Riverside, California, and become a member, a community member, and engage. If you want to come and meet us every quarter, we host an event called Mixing Knowledge B2B here in the office of Riverside, California, in which we have different business owners coming and talking to you about different topics. This one could be one of them that you can come and see us and meet us in person. Looking forward to meeting you in person, and I want to thank you for taking the time to looking at this video. Have a blessed day.